Welcome to the Broken Pie Chart Podcast, episode 375. I'm your host, Derek Moore. With me once again, Shane Skinner, Mike Snyder, or Mike Snyder and Shane Skinner, or Derek Moore last. Anyway.
Can we just settle that?
Who goes first? Who goes last? I don't know.
Snyder.
I usually mix it up every week.
No, I appreciate it. But I mean, at the end of the day, alphabetical order, seniority, Mike Snyder, Shane Skinner. It's perfect.
All right. Well, we'll go with that. Thanks for clearing that up. What is clear too is earnings are strong. You know, like the president does the State of the Union and he's like, the country's strong. Earnings are good. Let me give you some numbers here. If I look at sales growth, and this is just growth year over year, 11.18% sales growth. And I'm getting these out of Bloomberg. Earnings growth, 28.38% growth. So yeah, that's kind of good. You want earnings growing. And then here's the surprise, also out of Bloomberg. Sales surprise. Sales numbers are 2.05% better than expected. Earnings surprise, 20.67% better than forecasted. This is of 315 companies out of 499 that report in the S&P 500. Of course, we had Apple this week. We had Meta, Microsoft, and the other two, Amazon, and no, Tesla was last week. Who else was this week? Google. So our friends at Google. All right. I mean, look, this normally I would say, yeah, earnings expectations were too low because analysts were too bearish. But we've been saying for the last month, analyst expectations keep going higher. So the fact that these are coming in on elevated earnings expectations is good. Don't worry, we'll get to some bearish stuff in a minute. But I would say so far so good. When it comes to the individual companies, you know, we talked last week about what the expected moves were. I would say that, I mean, who is the big winner? I'm talking the Mag 7 now. Is it Apple cresting 280 today? Is it Google? You know, Meta, I think, kind of sold off a little bit, right, at first?
Yes.
Yeah, Apple, Google, Amazon all moved higher after earnings. Meta, Microsoft sort of down flat. So
I mean, Microsoft is still, Mike, that I feel like that OpenAI tangent is still impacting their share price because their earnings were good.
I think so. And, you know, OpenAI put there's some new restrictions in terms of the cap. There's a cap now in terms of Microsoft's income or revenue that they can generate from OpenAI. So there are some caps in place now, and I do think that is holding the stock back a bit.
Yeah, I mean, I guess when you think, Shane, about AI, and it's unclear to me who is using Meta's AI or what their strategy is. And look, I always tell people I'm not a stock analyst. I'm not digging deep into these companies like a dedicated analyst would be. But Shane, it's not clear to me how it is they're going to monetize AI or what they're really doing. I know they're spending a lot of money, right?
Absolutely. Yeah, the CapEx boom. I think you saw a lot of CapEx expansion in the hyperscaler sector this earnings season so far. So I think the market's very happy to hear that because it's sort of the logic that, hey, if the CapEx growth stops in the hyperscalers, then the AI trade slows. And that's where everything starts to become a little bit more questioned. I'm with you. The AI names, majority of AI names have seemed to have done better than Microsoft and Meta recently. I'll throw Oracle in there as well. And I'd make the argument Oracle might even be more tied to the OpenAI trade than Microsoft. They're both in it, I think, but I've got to do more research on the ties. But I think that's worth examining closer. But I mean, you know, the hyperscalers continuing to grow the CapEx, market's happy. There's still spending. I think NVIDIA, right? When is NVIDIA earnings? Is it in a couple weeks?
Is it May 30th or May 15th? That's the next one.
I think is it the 30th?
Might be. We'll find out. Yep.
Yeah. 30th. No.
So, you know, Mike, 20. Do you have that one? 20th. Okay.
20th.
Yeah.
All right. So NVIDIA. Yeah. I mean, I think until NVIDIA reports, you really don't have the whole picture on this thing. But I always remember, I remind people that Taiwan Semi reports early. They're making everything. Although it seems like Intel might start doing some stuff. So I don't know. I mean, I'm just saying as earnings go, pretty good earnings season. Let's talk about a couple companies though. And we mentioned Intel last week. I went back and I looked, they had a high in I think it was 99. It might have been March of 2000. And if you look at a chart of Intel, and I drew that for the audience can't see this, but you guys can. I drew the horizontal line across. Intel had retraced almost 80% from its probably March of 2000 high down to its low, I would say end of September 2002-ish, I think, or 2000. Yeah, right around 2002. So recently, I mean, this was at the end of 20 or kind of mid 24, end of 24. Their low was right around $20. They closed today just under 100. It was still kind of moving around when I took this. That is 398% off the low. But yeah, congratulations, Intel. It was not today. It was within the last few weeks. I think at the very end of March, they finally exceeded their .com era all-time high. Like, congratulations, Intel. You did it. I also looked at Cisco. Cisco's done the same thing. Cisco finally got over its March of 2000 high. And for those that were trading in the markets, I mean, Cisco and Intel, they were the stocks. Like magazines, there used to be these magazines when people read those, these investment magazines. And at times, they would devote an entire magazine to one company. And I remember they did it with Intel. The whole issue was nothing but Intel, nothing else. Cisco did it. I looked too, and I said, okay, obviously, if you owned Intel at the all-time high and you own the S&P 500 at the all-time high, you definitely were better off being in the S&P. In fact, at the time, I would say, yeah, you were better off being in the S&P because you're diversified. Intel, you're not. But then I said, let me just look at the low in 2002 and compare Intel to the S&P 500. It's close. The annualized return on Intel with total return 11.31 through some point today, 11.78. So yeah, like if you bought Intel at its low after the crash of in 2002, and you bought the S&P 500, kind of the same. So yeah, like if you were somebody who said, I'm not getting out until I get to break even, you got to break even on both Intel and Cisco. So I don't know if this means more to me because I was in the markets at that time and certainly trading these companies. But Mike, I mean, it just goes like buy and hold. Buy and hold apparently was the thing to do with that. Maybe not though.
I mean, yeah, if you were able to buy them and hold them while you underperform the market and now you've finally caught up, I mean, I guess good for you for being able to do that. But yeah, two great, I don't know if you call them turnaround stories, but the way that these stocks have moved recently I think has definitely surprised the market. I mean, Intel blew out earnings and raised guidance. And, it's sort of similar to what we saw happen with Microsoft, which was, early, 2010s to 2015s, maybe even before then, the stock was just flat. And
it was a saucer pattern.
Do a whole lot. And they sort of reinvented themselves and, took off from there. And it sort of seems like these are two similar stories with Intel and Cisco.
All of a sudden, too, you have people buying these names. So, I mean, Intel, Intel was a widow maker. It was always going to be a turnaround. Like, oh, yeah, this is the quarter they do it, or it's really, really cheap. It's a value stock now. This is the time to buy it. And then it just went nowhere. Like, Shane, could you imagine just owning this whole time? And I mean, if it was almost the same price in 2025 as it was 2003, 2001, like your frustration in the stock and the fact that it broke out, it went nowhere for years, Shane.
Oh yeah. I mean, I wish we'll never be able to know, but I wish we could know what part of the float, was purchased in 2000 or prior and, never taken off, right? Like if we could know, because, it's incredible. You talk about this stock peaked, right? And what was the high here? I've got it. 75.83. 75.83 in August of 2000. Okay. And the low on this stock at one point it
was 20. Oh, you're saying in 02. It was
low in 09.
20.
Actually. Yeah, 09 it hit 1205. So, I mean, just an incredible example. I think that, while a company, not all companies do what Intel's doing, right? But companies can stay alive. Companies can become relevant and change over cycles, right? It's just, it took 20 years.
This is the survivorship bias, where how many companies aren't around anymore.
Right.
And yeah, I mean, we'll talk about Micron in a second, but Micron, Cisco,
SanDisk.
Intel. SanDisk wasn't as big. Like I'm giving my perspective from the early 2000s and the late 90s.
Okay.
But these charts look like the Nikkei index, the Japanese stock market index, where you have the all-time high right at the end of 89, and it didn't break that high until 2025. So it's similar. I didn't send you guys that chart, but I should have. It's really similar. So let's talk about Micron though. And Micron, that chart is, it's the one right below the Intel versus the S&P chart. And I was looking, I love watching stock price, see what the multiple is doing, meaning the forward PE, and seeing what the forward EPS is. And I would say it's not a hobby. That's not really what I call it, but I love looking at this because what's the attribution of returns? Is it multiple expansion contraction? Is it EPS expansion contraction? And then if you really want to dig, it's are margins rising or falling, or sales rising or falling, and all those pieces moving together. So I pulled up a 1-year chart in Bloomberg on Micron. And at one point, it looks like, if I get the scale right here, I mean, the forward PE at its high point in November is a little bit more than 14 times forward expected earnings. They're trading today, according to Bloomberg, 6.3 times forward estimates. Their estimates are $85 a share. And where the stock closed at today, something like 540, 542, right in there. So it's kind of nuts. And what this is sort of telling me is that institutions or people who trade on valuation either don't believe the valuation or believe this is going to be a one-time thing that gets solved and they're going to lose pricing power. But how is the stock trading at 6 times forward estimates? Mike, I mean, this is trading at a lower multiple than Apple.
Yeah, that seems pretty low. I mean,
Apple's at a 30 forward PE. You can buy this at 6.
It seems like back in November when it was trading at a much higher PE, the market was thinking, this stock, the estimates are too low potentially, and that's why it was trading at that lofty PE, and now the PE is shrunk.
14's not lofty. I mean, come on.
Compared to 6.
Okay, fair enough.
And now the PE, it's sort of like, can this growth continue at that pace? Is sort of what I'm gathering from it being that low.
I mean, I haven't really dug into their financials. I'll have to do that this weekend. I'll just look, and we don't necessarily buy or sell stocks based upon internal Zega work that we're doing. But yeah, I mean, Shane, when I look at this, it's just, this is crazy. How is this trading at 6 times forward? If you believe that those estimates, or do you believe, I mean, basically to me, it's yeah, they might hit $85 a share, but then it's going to be back down to $20 a share, not too long after that.
I think the idea simply stems from the fact that this is it. Memory is everything. And what kills this trade is if for some reason someone in the space develops something that it like Google recently developed a way to compress memory in AI. And basically what that means is, say you've got something that takes up a lot of memory. They're finding ways to more effectively reduce the amount of memory and increase the output capability of whatever it is they're running with AI, right? And so that matters because the size and the scalability of this stuff gets really crazy with how big this is getting, right? And it's taking up massive amounts of memory. So that's why there's piling into this. It's because the market's all of a sudden, I think, realizing not only are chips relevant, but now that we've committed down this path, memory might be the next thing down the pipeline, right? And we'll see. This thing could completely come back down. This chart, it's insane. Whether it lives up to it or not, who knows? But, from a technical perspective, it looks like it's ran pretty hot. We know sometimes that doesn't mean anything. But yeah, it's like you said, it's either it's like the current hot thing that everybody's getting in on, and then it's going to fade, or, there's something to this that's a fundamental.
Well, Samsung is another big player in memory. They are on the Korean stock exchange. Looking at Bloomberg, they're trading at just over 5 times forward estimates. I will be honest with you. I don't. Korea is not a market that I follow, but I mean, I'm aware that the reason why Korea's stock market has been so good is Samsung is a huge part of that index. So, but yeah, I mean, it's just an anomaly, and I'm not saying to buy it. I'm not saying to sell it. You do what you want to do, but it's it doesn't really. Do you buy Apple at 30 times, or do you buy Micron at 6 times, or Samsung at a little over 5 times? I guess we'll know when we know. All right. Want to talk about some bearish stuff? Should we do that?
Yeah.
Okay. So Tobias Carlisle, who is a value investor, they've got they run a podcast, Value After Hours. I've listened to it, and a lot of people are like, why are you listening to a bunch of value guys? I think they do a good job, and I like listening to spaces that we're not necessarily is our outside of our niche. So he put out this post though, and he basically showed the leading economic index, which is LEI. And LEI is things that move ahead of the economy: orders, hours worked, sentiment, credit conditions. And CEI, that's the coincident economic index, things that move with the economy. So employment, income, production. So when you see leading economic index, it's things, as he puts it, in the orders, hours worth. These are things for the future, and employment, income, production, those are things right now. And basically saying there's a ratio, and the ratio is the LAI against the CEI. And he said when the ratio is high, leading data is strong relative to current conditions. The future looks more buoyant. I'm reading from Tobias's post here. And when the ratio falls, the forward-looking data weakens relative to current conditions, a signal the economy is losing altitude. The current ratio is about 0.85, and he points out it's one of the lowest readings in 60 years, tracking levels seen ahead of every recession in the sample, showing a persistent multi-year decline similar to pre-1980, pre-1990, pre-2001, pre-2008, and 2020 patterns. Markets usually bottom before the ratio troughs. Small caps and cyclicals underperform sharply during the downward leg. Quality balance sheets outperform junk. Value dispersion widens. Forward returns improve dramatically into the trough. Okay. And then we have this chart, and you guys can see the chart. And for the audience, it's low. And it's 2008, 2009, I would say 2009 was lower than it is today. And you look at 2000, 2001, kind of trough there, it's lower than then. So yeah, if you're looking at this and you say that these indicators, this ratio is a thing, a recession's right around the corner. So I know Tobias has also done some work on the yield curve inversion, and we haven't had a recession yet. I mean, are we out of the point where we say that's no longer a valid symbol? It's because it's been too long since it inverted. I don't know. But okay. Mike, I mean, you buying this? A recession's around the corner here? I'm being facetious, by the way. I'm being a little sarcastic for the audience.
Yeah, no, I mean, it's interesting, and I think these are, good points. And the chart looks convincing. I don't love the look of the chart if you're bullish, but do I think a recession's around the corner because of this? No. But it does match up with previous recessions. There's no denying that. I can't tell quite exactly, when it bottoms. Is that after the recession's over, or if that's before it starts? So I don't know how leading or lagging this is, but it does match up.
Shane, if I look at this, is this a case of forward-looking things being overly bearish, and it's just kind of a sign of the times right now? Like half the country is going to be bearish at any one point, and we know sentiment's at all-time lows.
It matters when it matters.
There you go. Saying, yeah.
It matters when it matters. I'm sorry, I have to quote you on that. It's just, I've seen so many other indicators that have fundamentally held up for a really long time. It feels like the past 50 plus years. The Buffett ratio, I think, is another one that everybody's made a lot of noise about over the past few years because it's just so high. I don't know. I think I want to know, I don't see it here. I want to know, one, how did it do prior to 1960? Because if you notice, it's sort of flat there for a while in 1960. I'd like to see what it looked like in the 50s. Because I'm wondering if there was a period there where it ran down and sideways for a while, and then this is just conveniently being clipped right there at the end to claim that. But, outside of that, I mean, there was a 10% pullback just now in the market. It was pretty sharp. There's a lot of people that were really worried. There's been a spike in oil. Like, you might not call what we're experiencing right now a recession, but I would, remind everybody that, yeah, we just saw a major pullback in the market. We recovered pretty hard. And, like you said at the beginning of this, there's been a lot of, beats and increase in expectations that does align with his point that says that, value or forward returns improve dramatically into the trough. But,
I mean, if I want to explain away this and say, no, this doesn't matter, I would probably point to the LEI, the leading economic index. Sentiment is in there. And from memory, I can't remember what the textbook says. I feel like is it 15 or 20% of this is derived from sentiment. And we know sentiment is very, very low. And it's odd that it's very low right now, although some of my research showed that a lot of times what the sentiment is today doesn't necessarily line up, on a scatter plot, XY scatter plot. It's not necessarily predictive. The other thing I would just point out too, and this is, the economy and the stock market are two distinct things. And what's going on in the economy might be different than what's going on in the stock market. And we've got, technology, certain areas of the market are definitely driving earnings. And maybe this is just a decoupling and none of this really matters. But I like what, some of the stuff that Tobias Carlisle puts out. I think he does a good job putting out some of this data. So it's just, when I see this, I just kind of say, oh, that's interesting. Why is it that low? I wonder if, I guess I could do this at another time, but I'd love to plot a chart of sentiment on this as well and see if there's if it kind of looks the same. Geiger Capital put out something, and ISM US manufacturing activity hit 52.7, 4 straight months of expansion. And on that chart, I mean, you look at the last 4 as this quarters, months, okay. Last 4 months, audience can't see the chart. Those bars are a lot taller than any month going back to 2023. So, and looking very different as the tweet points out from 2022 to 2025. So, and then you look at ISM Manufacturing Prices Index. This is from Augur Infinity. I don't know who that is, but thanks for posting this. And basically it says the ISM Manufacturing Price Index surged to the highest level since early 2022, pointing to significant pipeline inflation. Like if you're bearish right now, you say, well, the leading economic indicators are not looking good. Sentiment's not looking good. Pricing is starting to gum into the input cost of different companies. And the market has this, air quotes, the market has this wrong if you're bearish. You're saying the market is not properly pricing in the risk of higher oil for longer, more inflation for longer, and things dragging out. So I don't know. I mean, Mike, when you look at this, if you're a bear, I think it's you can point to a lot of this stuff and you can make a good argument.
Yeah. I mean, this also, I think, ties in with interest rates, right? And if prices are going to remain elevated, then, we know that the Fed is probably less likely to cut, which I think the market is still hoping could be a possibility. It seems right now like it's not going to happen in the near future, but it will likely take that off the table as a possibility if prices do remain elevated.
Mike, do you think it would be odd for the chair, and we're going to have a new chair, and it's worth mentioning that Powell said he's going to stay on, and I think that's his only leverage to try and get the investigation completely like, oh, you're done, we're never going to investigate again, you're clear. I think that's his leverage point, so he's going to stay on as a governor. If he leaves, Trump would get to appoint a new governor in his place, but Warsh is taking over Micron's seat anyway, so he doesn't need Powell to leave. He can come in. I mean, it would be odd for the chair not to get what he or she wants. In this case, Kevin Warsh. If he wants lower rates, generally, the committee bends kind of to the chair. Like, I can't think of a time when a committee chair dissented against the whole board. So I'm still in team. He didn't come in and get this job because he wants to raise rates or keep rates neutral, Mike. I still think he's lowering.
I agree. I think that's why he was sent there. I'm curious, has he said anything about that recently? Probably not. He's probably not really supposed to say anything before he takes the job. But it seems like that's why he's being put there is to lower rates. And so I'm still in that camp, but I think the market disagrees. And, I know there was 3 or 4 dissents from the meeting earlier this week where it was mostly about the language, not necessarily disagreeing with the policy that they set forth, but about the language in the future about looking to potentially ease. They wanted that to be a little bit more tough. And so
I think they wanted language like, oh, we could hike or we could lower.
Right.
I got to tell you, Shane, when we look at, and I'm sort of tired of having this discussion, but I'll explain what I'm going to explain and you can comment. And it's everyone keeps saying, well, they can't lower rates because if they lower rates, inflation will take off. I got news for you. Rates didn't cause inflation in 2021, 2022. It was fiscal policy and putting money onto a supply chain issue. We had low rates for a decade after the GFC, the Great Financial Crisis. Like, to me, you could lower rates. It's not going to cause inflation. I'm going to put my flag in the sand or put my flag in the flag holder, whatever it is, Shane. Like, I'm tired of this discussion. Like, if rates being low caused inflation, why do we have no inflation for 10 years?
Yeah, I mean, I think that it goes back to the concept of supply side inflation versus demand side inflation. I think we've had that talk before.
Mm-hmm.
And, you know, for those who don't understand the difference, supply side inflation is essentially inflation caused by something in the supply chain disrupting, or for even more general purposes, supply is lower. The availability of a good or a service is less than it was prior.
When you say, Shane, that the oil crisis in the late 70s and the post-COVID inflation, that's really your two examples going back 40 plus years, right?
Yeah. And I think for the playbook, you know, the Volcker stance was like, we're going to raise rates, we're going to keep rates higher. It was sort of like the bad boy, inverse to what a majority of people probably thought. And there's a lot of people on one side of the economic table that think that, hey, you should have lower rates if you're experiencing a supply side issue, because that means there's something wrong going on within the supply chain. And to unkink that, maybe it is cheaper financing to expand supply. Maybe it is something like, you know, an issue with something geopolitical that isn't necessarily going to be solved immediately by investment into expanding that supply chain. But I think that what you're seeing right now in the market is like, I don't think the market is believing that what's going on right now on a broader geopolitical scale is actually that effective to the general overall like 2026 US economy. And I think it's really easy to sometimes think about the economy as what it was 20, 40, 60, 80 years ago. I know that you know the chart that I'm going to talk about, but at some point, I think it was something like 70% of the market was firewood related to wood, right? Like, you know, we're not in the same economy or same market or same world we were 20, 40, 60 years ago. So in some ways, yeah, some of this stuff has stayed the same, and what matters. In other ways, it's different this time. You know, it's not always the same.
The thing that Warsh could do, though, is he could just normalize rates. And normalizing rates could just be easing 75 basis points. Like, Mike, when you look at, if he did an ease of 75 bips, what does it take it down to? That is 3%? Is that right?
Yep.
He could go more. He could go a full point and go down to 275. He could probably get down to 250 and just say, I'm normalizing. I'm not easing. I'm not lowering rates. I'm just normalizing rates. Because 2.5 is sort of, you get paid a little bit on the front end and it's not zero, right?
Yeah, I think that would be one way to play it. Are you saying he could do that all at once?
He's not going to do it all at once. I'm saying eventually he could get there.
Yeah, I think they will, based on everything we know today. I think they will. I do think the market is hung up on inflation and higher prices, though. Whether or not the Fed feels the same way, I don't know. But the fact that the market it's still pricing in 0 cuts this year, it's odd.
It is odd, and I don't know. We'll see. All right, I'm bored of the Fed. Let's talk about, let me see what else I want to do here. Charlie Bolello put this out on Twitter. So we have had 11 all-time highs this year. 2025, 39, 2024, 57, 0 and 23. And the last time we had 0 was 2012. I have no other comment on this, but I like to see how many new all-time highs. And we know there's the data that says if you buy at an all-time high versus buying other times, I think your performance is kind of the same. Like, new highs beget more new highs, unless you bought the last high, like 2022, January. Then you have to wait a little bit for a new high, but 2 years. mean, if you bought the all-time high in 2007, you had to wait till 2013. So there's that. What else do we got in here? Let's talk about what else did I put in here? What's the company? Oh, the AI switch. So you guys brought this up to me. Shane, you mentioned there's a Japanese toilet bowl company that decided to go to AI. And Mike, you mentioned Allbirds. Is that a shoe company that this reminds me of the early 2000s, late 90s, early 2000s. So what companies used to do is like Waterhouse Securities. And I don't remember if it was TD Waterhouse at that point, but Waterhouse Securities was a brokerage firm bought by TD Bank, TD Waterhouse, and then eventually TD Waterhouse and Ameritrade became TD Ameritrade, and then finally TD merges with Schwab and it just becomes Schwab. So, but I remember they were going to spin off like a Waterhouse.com, or Barnes and Nobles was a bookstore, and then they spun off like BarnesandNobles.com. So, and then you'd see these companies that were just, it was almost like a shell company. I remember there was a chiropractic company that also mined for ore and natural. I don't know if the workers had bad backs, so they needed a chiropractor afterwards, and it seemed like a natural. Maybe they just wanted to become public and they acquired the other company that was worthless. I don't remember. So, Mike, I think let's talk about Allbirds first, because that's a U.S. company. So you're telling me they're selling shoes and now they're going to become an AI company. Like, in what world does this make sense? I mean, clearly, if you know how to build shoes, you are an expert at AI. Like, explain what this is doing, and then what the price has done. Mike, I think you're on mute.
He disconnected. I see he's got disconnected.
Oh, he got disconnected. It was too much. The conversation was too much for him. All right, let's switch to your toilet bowl company in Japan.
Look, I'll take a stab. So Toto apparently is the world's second largest producer of electrostatic chucks, also known as e-chucks, used to manufacture NAND memory. And so it's a RAM play. They're a large manufacturer of something in the memory space. It's designed to securely hold, they are designed to securely hold silicone wafers into place during fabrication via electrostatic force. The ceramics division, which was created in 1984, makes aerosol, deposition components, and structural parts used to manufacture LCD panels. So basically, for the audience, they manufacture toilet bowls, but in the process of manufacturing, they have these other processes that are dealing with materials that are helpful in companies who need data and storage and memory for AI. Is that kind of the Cliff Note version? Yeah, that's perfect. And Derek, like, you see this all the time in markets. Like during COVID, I remember when it was said that the only way that when they were going to transport stuff for the vaccines, it was going to need to be frozen. And I remember all of a sudden, like 5 liquid nitrogen companies, some of them OTC stocks, right, just took off and went crazy. And it was just because all of a sudden, there's this supply constraint in some area that is a very important area at that time. And all of a sudden, these companies that kind of are nothing become relevant, most of them for a short period of time. I would argue that they're probably not going to become the biggest player in this space, and this is more of a hype play. Who knows? We'll know, in a couple of years. But it's odd to me that you would think that these guys would take off in this space versus the major players that are already significantly more established and built to take on what I got to be honest with you. So I'm not doing due diligence and research in the Japanese market. But what I love is somebody bought this early.
And like the people, this is the picks and shovels of the picks and shovels of the picks and shovels of AI.
Right. About as deep as you can get, right?
Yeah. And there's people doing real work out there, analysts and investors who are doing this stuff. Okay. Like I see that they have some items that are useful somewhere else and maybe they can help out. What I'm not getting though, and we'll come back to this, Shane, is it Allbirds? They make shoes, Mike. And now, you had dropped off there. You get disconnected. But basically, I'm like, of course, if they can make shoes, they're going to do something with it. Like, what the heck are they going to do with AI?
Yeah, I don't know. I mean, it sounds like the company Shane was talking about, had something in their process that they were able to convert.
Yeah.
This is completely separate. They sold their shoe business. I mean, they were going to be a failing company. They were closing down their retail stores. No one was buying their shoes. They sold their shoe business and just completely rebranded their company. And now they're doing GPU as a service.
Are these the same people? Okay, so here's my question. Did they get so cheap they were going to go out of business? If you've read, reported they may have gone out of business, is it cheaper to just acquire them for the people who want to do this AI stuff? And they'll change the name or they'll change, because, to become a public company, it's a lot of money. There's lawyers involved. You got to do prospectuses, S1s, roadshows, the whole bit. Like, is this that? Or are these the same people who are like, yeah, we know how to do shoes. We know how to do whatever it is that we're going to do.
I don't see that they took on new investment other than, the $39 million they raised from selling their footwear assets. I don't see that, a new CEO came in. I could be wrong. I haven't done that much research into it, but
I don't know why not. I mean, you should be the leading analyst here. It's, on Bloomberg, this is so new. It still says manufactures and sells footwear and apparel products. So, I don't know. So what happened to the price, Mike?
Yeah, it was trading at $2.50 about the day before the announcement, and it peaked. I think it actually peaked in the 20s, showing like $24 a share the next day. Now it's at $6.46.
Okay. I'm actually capturing a chart of Toto, the other one. So is this, legit, they said they're going to go to AI. This totally reminds me of a company in the 90s would put .com at the end of the name and it would just shoot up. And it didn't even matter if they were going to make money, not make money. It would just shoot up.
Yeah, the company's their new name is going to be Newbird AI.
Okay. Well, best of luck to them. I don't really know anything about their endeavor, but good luck to them. I'll pull a chart of Bird as well. Shane, I'm looking at the chart of Toto. Like, although the move, it's definitely accelerated and had a little bit of a parabolic move lately. But if you look at that chart, if I pull the right company from the Tokyo Exchange, it started its run, back mid-October is kind of where it was trading sideways, and it kind of rolled into February and then pulled back and then pulled up again. So
this who knows what this is, right? This could be a double top. This could keep going. This actually, I'm very surprised. It kind of looks like in our chart we've discussed before, right? The chart of a bubble. Not saying that this is a bubble, not making a call on the stock, but this looks like the first run up that looks like, it's going to pull back, and then it just takes off. So
I could see you start trading internationally. Like, you figure Central Time, Tokyo opens what, like 6 o'clock?
That, yeah, I'd be fine. Yeah,
you should be trading these all night and then come back to work the next day and just trade.
I might even
don't
trade
do that.
Yeah, 4 to 6. That's a great time period, right? 4 to 6 Central. There's a lot of work that gets done in London during then. So
birds look like the bird chart. Absolutely is parabolic. Look at that volume bar. Goes up, comes. It wouldn't surprise me. Like, I don't know what the heck the stock is going to do, but wouldn't surprise me if it comes all the way back down. We'll see. There was So I remember this. It's probably 1996, maybe. No, actually, it was probably later. Now I'm trying to remember. I got to think about where I was. It was during the dot-com era. And so, you know what? It might have been in 99 or 2000. And there was this company. I'm not even going to say the name of the company. I'll tell you guys off air. But it was trading at like 3 cents. It was a penny stock. And it runs to something like, it might have been $5. I got to find a chart on this. I almost assure you it's not still publicly traded. And, CNBC was talking about it. It just went parabolic. And I literally saw people whose accounts went from like, $5,000 to $1 million and didn't sell and could have sold. And at one point back then, they used to have these, they were in a fast market. So I remember placing orders for people and we would sell it. And you're like, I don't know what your price is going to be. It's a fast market. Enter it. You might get an execution tomorrow. It might be 2 days. I mean, it was literally that crazy. So one of the guys on the trade desk called information and asked and found out the number for the company. And he's like, I got to talk to this company. And he calls them and they literally answer the phone, hello. And that was it. It was like 3 people at the company. And this thing eventually went back down to whatever it was trading at. So, but some of this, like, we're not there yet. Like, it's hard for me to put into words, like, what happened in the dot-com era and the craziness and the stocks that would just run out of nowhere for no reason at all because there was in a chat room or something like that. So, all right. So Shane, are you loading up on Spirit Airlines stock? Is that your next one?
Look, you joke about this, but I learned a lesson with Hertz in the early 2020s. A stock can look dead. And this is where you might think short Spirit, because apparently they're shutting down. So the obvious trade to someone might be short Spirit. And this is where you got to be careful because the obvious trade was to short Hertz. And then they got bailed out. And
I got to be honest with you. It's trading at $1. If you short this, the most you can make is $1.
Yeah,
you have unlimited upside. Yeah, don't do that.
Yeah,
nobody short it. No reasonable person is shorting this.
No, exactly. So, but there is, I think that there's been a lot of.
I mean, they're in bankruptcy now because I see the Q at the end of the name, right? That's Q usually means bankruptcy. Yeah.
Yep, it's coming. So, Spirit's one of those that I think was able to stay alive with some of, the COVID loans and bailouts. I think Spirit was already struggling and they just kicked the can as far as they could. I think that it was evident was it JetBlue that tried to buy him out like a couple of years ago? I think it was in like 2024.
I wonder if JetBlue tried again today,
right,
whether it would go through.
I wonder too. I wonder if now they'd allow it. And
or maybe JetBlue doesn't have the money anymore. I don't know. I can't say I follow Spirit and JetBlue, but
I don't follow the airlines that hard. But it's also incredible because I feel like this is an example of a company that it works in an industry that there's demand, right? They've been around for a very long time and they just can't.
It's their debt. I'm looking at the enterprise value on this. So enterprise value is what's the value of the shares, and then what's the total debt. They have $1.19 billion in debt, and their market cap today is $29 million. So $29 million is the value of the equity. The value of the debt is $1.19 billion. I'm not going to go and look at their balance sheet and see what assets they could sell off and things like that. But it's, Mike, are you going to take a flyer on? And I have to give my public service announcement in a second. But are you going to take a flyer on this? Like, are you all in?
It's a good pun.
Fly Q. Oh yeah, you like that, huh? You got that.
I like the pun, but no, I'm not all in. And like you said, there's no reason to short this either. You have unlimited risk, even though. Doesn't seem like...
Well, it's not marginable. How would you short it?
Yeah.
How would you borrow the shares, right?
Right.
Well, actually, it could be in a type 2 account, but be 100% requirement, granted.
Yes.
Okay. But don't even waste your time on this. Like, go take up like basket weaving or put a new driveway in your house, even if you don't know how to do it. It would be more productive. So can I tell you, so my tuition that I paid was TWA, another airline. So TWA was bankrupt, and I did check the Q at the end of the symbol. It takes me back. When you see a Q at the end of the symbol of a stock, it means the company is currently, they filed for Chapter 11 bankruptcy protection. So they're in those proceedings. But TWA was my tuition. And when I say the tuition, it's the tuition you pay to the market to learn a lesson. And I was like, TWA is trying to come back. They're in bankruptcy, and they were offering these ludicrous low fares. And I was like, is anybody actually flying on it? Well, I flew on them. I was like, oh, this is great. So I didn't put that much money into it. I put it in, and they went bankrupt. But remember, the equity holders they get paid out last. So the bondholders get paid out first. There's different people in the equity stack. And GM was the other one. I didn't do this one, but a lot of people were buying GM stock when it was in bankruptcy, thinking, oh, it's going to reorganize. You'll get a bailout. You don't necessarily get the new equity. Like the old equity might go away. So that's my public service announcement. But maybe they should have pivoted to AI, Shane. That would have been the thing.
Yeah. Autonomous airplanes.
Yeah, we're not doing flying anymore. We're doing AI.
Well, I was going to make this statement earlier. You mentioned Facebook and how are they going to monetize it versus this, Microsoft versus Google and stuff. And I would argue, you mentioned Spirit, planes are already on autopilot. Like AI, the various economic revolutions that we've gone through have always been about automating things, right? And so I think that it's not going to be that big of a shock if you see AI in everything. Didn't Ford come out and say they're going to have an AI assistant in every new car starting in 2027? I know it sounds nuts, but we're really close to being in that kind of a world where it's going to be integrated into the infrastructure around us. It's not just going to be something you use on your phone or laptop or TV. So it's crazy as it sounds. I feel like we're going to see more of this. It's just Spirit. Unfortunately, it's another example of, the discount game. Airlines are one of those businesses where you just get it. Margins are tight sometimes, and they didn't manage their debt well. It sounds like it just is what it is.
It's the debt's the problem. So I am looking at Bird again. I can't believe we're even talking about these. I'm punching this into Bloomberg and looking at the enterprise value. No, I love this stuff.
Coming back to Bird, I love it.
So 22.2 million is their debt. They have cash and cash equivalents of 26.6. Their market cap is 56 million. So their enterprise value is 51 million. Yeah, I don't know what this company's even going to do, but Spirit that's the problem with a lot of airlines. They wind up with the debt. And so someone may not actually decide they want to come in. Do you buy them? And because when you buy a company, you buy their debt too, or do you just eventually buy their planes at auction? I don't know. All right. What else we got this week? How about recommendations? I think we're done. Unless you have any more Japanese. I can't believe we talked about Samsung on the Korean exchange. And what is this toilet company you had me talking about, Shane? Toto?
Toto.
Yeah. Okay.
It always comes back to Japan with me, if you haven't noticed, right? I love it. It's great.
Well, I used to joke with Jay that on the weeks that he took off, I'd get into my summation of the Himalayan money markets. But all right. Recommendations, Shane.
Yeah. I mean, look, playoff hockey's still going on. I'm going to give you a better recommendation than that. But look, again, if you haven't done it yet, please, you're doing yourself a disservice. If you've never watched hockey like that, NHL American playoff hockey it's electric, to say the least. But
North American, remember our friends to the north.
Right, I apologize.
It is the sports after all,
it's great how global, and I didn't realize that until I really got into it. It really is worldwide. It's pretty impressive. But
yeah.
Beyond,
right, do you have anything else besides the playoffs?
Yeah. We are going to start. We've never watched it through. We're going to start Twin Peaks. So I've never seen it. I like David Lynch. My wife's willing to give it a shot. We'll see. I've heard it's a slow burn. It takes a while to get going, and it's also pretty out there, given it's David Lynch. But we'll see.
Did you watch Serpico?
I did. Serpico was fantastic.
Did you watch All the President's Men and Justice for All?
I have not done my list of
70s
or my Tom Cruises. I still haven't done that. Like, I haven't seen the Mission Impossibles. Like, I know I told you that, but I've seen Mission Impossible 3 recently.
But if you want to do early time, I mean, like The Color of Money, which has Paul Newman in it's good.
Oh, Paul Newman's great.
All the Right Moves, where he's high school football. I mean, you have some catching up to do on that catalog. So okay, so that's a good recommendation. Mike, how about you?
Yeah, one that you mentioned, I actually started Rooster. Through a few episodes of that. That is, I'm going to give it a buy. I think it's great. If you like Ted Lasso or Shrinking, it sort of reminds me of those shows. I think some of the people involved in those shows are involved in Rooster as well, but very good so far.
Did you see Ted Lasso's coming back?
I did. August
5th, and Jason Sudeikis is going to be in there.
I saw that.
I think in the preview, I saw a little preview, he's going to coach their women's team. I was wondering if he was going to come back and how they were going to do that. So I don't know, there's probably Apple. My guess is threw a bunch of money at them and just said, you have to keep doing this. Like, it's too successful for them to, I don't know. Like, it was, the way they ended it, though, was a good a good close. So we'll see if they can land the plane coming back. I am going to start season 2 of Friends and Neighbors. I will come up with a recommendation. I did watch something on a plane. Marty Supreme. I watched it on HBO Max. It was a movie. I'm going to put a hold recommendation on it. Like, I thought it was really good artistically, but just I wasn't really looking for that type of movie. And maybe I'm wrong on it. Some people may disagree, but I'm going to put a hold on it. That's my recommendation. And I don't know if I'm telling people to watch it or not watch it. Like, it's a movie, so you're not invested. You don't have to watch 20 episodes. Have you guys seen that at all? Marty Supreme?
I haven't. But I think it was up for some awards. Not that makes it good, but
yeah, I saw the trailer. Is it more drama than you had expected for that kind of a movie?
No, it was well acted. It was like a really good quality movie. I'm just saying I didn't necessarily. I'm just giving it a hold.
All right.
And it's not that I don't like those types of movie. I'm giving it. Mr. Wonderful from Shark Tank was in it too.
Yeah, I
he actually played a role. He was good in it.
Fran Drescher, Gwyneth Paltrow.
But Kevin O'Leary was good. Like, if I didn't know that he was on Shark Tank and not an actor, I'd be like, oh yeah, he was pretty good. And he kind of played to his personality, the role that they scripted for him. But I thought it was good. All right, that's it. That's all we're doing. Shane, go get to trading the foreign markets and find more obscure companies that we can talk about. For everyone else, we'll see you next week. See you, everyone.